Hello, this is your boy Imran, and in today's video, I want to show you like a replay. I want to show you how you spot the the uh, days high and each day's high and 8 days low. Okay, so quickly let me go to my D1. All right, and let me just pick a candle. Look, a small candle, small candle, look for a small candle. Okay, I think I got one here. Now I'm going to be using this one, this very candle. Okay, this small green candle to set an example. So first I want to draw my horizontal line below the lowest low. Okay, the lowest low, which is not the close, this is the close of the candle. Okay, this is the close of the candle, but this is the lowest low, the wick. So I'm using the wick to draw my highest high and lowest low. Now you're going to see the relevance of this. You're going to see the relevance of this. Let me draw my vertical line to mark that very candle. All right. Okay, so now I haven't drawn this. This is quite far. Oh, that's quite far. We'll need to really scroll backwards to get it. It's too far. I need to scroll way too backwards to get the very deep. But let's see. If I can find it, I'll just go and use a candle that is okay. I think it should be somewhere around here. Should be somewhere around here. Should be somewhere around here. Can't find that candle. Can't find that. Okay, good. Beautiful. So this was uh this was what now? This was 9th of September 2019. Okay. Now I want you to take notes. Take note of this. Let me bring my cursor out. Take note of what I'm about to show you. Now look at this. This is the highest high and this is the lowest low of 19th, the 9th, all right, or 19th. I think the 19th of September 2019. Okay, that's the highest high and this is the lowest low of that particular day. Okay, now bear that in mind. Now let's look at how price reacted on the H1 when price got to the highest high and the lowest low. Now this is the 9th, so the next day will be the 10th. All right, this is the 10th day of September. Let's look at this. So price was here, go to this high. Okay, price go to this high and make this low. When we crossed over to the next day, what do we see? Price tried to go as high as the high of the previous day, but price couldn't get to that high. Then all of a sudden from that point, price began to drop. Price began to retrace, began to make lower highs. Okay, price began to make lower highs. Price began to make lower highs. Okay, lower highs, lower highs. This is uh perfect trend market. Lower lows, lower lows, lower lows. Okay, now look at this. When price got to, this is the lowest low of the previous day. What happened here when on the this happened on the 9th, when price got uh to the 10th, the next day price broke that uh price broke that support, the previous day support, broke it. Okay, traded for a while below it, came back right up, tested it as a resistance, but the resistance couldn't hold. Then price broke above it. Then all of a sudden, price came back down and broke it again. Okay, so it was a weak support. So price broke it again. Now, automatically, the previous day support poses a trading spot for major institutions, for banks, for myself, for big time traders. Each day's high and low is the first point of call that we'll look at every day before we take trades. Where is the high and where is the low? Now, every time price gets to the high and the low of each day, there will be a reaction. There will be a reaction. It's either going to serve as a support, it's going to be broken and retested, broken again, or it's going to serve as a strong resistance, such that price can go above or beneath it. Okay. Now, if you look at this carefully, this was on the 10th. This was how, okay, on 10, this was how high price went, and this was how low price went on the 10th. This was how high price went on the 10th. And this was how low price went. Now, what do you see? What do you see? Can you see that when price came to the low of yesterday, now remember this is day 10, this is day 11. When price came to the low of yesterday, see what it did. It served as a support. You know, price wasn't sustained beneath it. It broke it anyways, but it bounced back up. It broke it again, and it couldn't sustain underneath it. It couldn't serve as resistance. So price broke it again, and there you go. So automatically it became a support zone. Remember, support is not a line. Support is a zone. Okay, support is not a line. Support is so the whole. Yes, this low, this area is the support area or zone, and that's why we see this reaction here. So yesterday's low served as a support zone for today's, or on the low of 10 as a support zone for the low of for the price of 11th. Now let's look at what happened again when price broke through and went up. What happened when price got up? Now remember the previous day's high. When price got there, what happened? It served as a resistance. Price couldn't sustain above it, so it became a resistance. Price broke through it a little, but it couldn't hold above it to serve as support. So it broke back in and started trading back down. So every day we want to trade, our first point of call is to look at what is the day's high and what is the previous day's low. If you look at this, remember each of these dividing lines represents a day. Okay, now look at this. This was the low of the day. Let me see. Okay, don't worry, but okay, I think this was 20th. I think it's beneath here. Okay, 11th rather. Sorry, 11th September. So this was the low, and this was the high. This was the low. The next day, when price opened, price couldn't get to the high of the previous day before it began to trade downwards. And when price got to the low of the previous day, what happened? Price broke it. Now, was price able to bounce back above it? No. So it became a resistance for price. Then price began to travel all the way down into a trending market. So each day's high and each day's low serves to us as a support and a resistance key areas, major key areas. Okay, major zones. We don't dare downplay it. We don't dare look down on it. Major areas for us. So, if you are trading, whenever you're trading and your margin level gets to 100%, you've already crossed danger zone. You are entering the land of no return. Okay, anything that happens after it's 100, your broker will automatically close your trade. So nearly every broker I've traded with, their default margin level is usually set to 100%. Okay, 100%. So whenever you're trading, if your account is, let's say you have $100 account, you can't open a standard lot. Okay, you can open a standard lot or 1.0. You can open a lot, a trade with 1.0. All right, because automatically your margin will drop drastically to way below 100%. All right, so whenever you're trading, this is your, if you have open trades, let's say for example you took a trade and the trade began to reverse. If it begins to reverse, this guy will start drop. You predicted it's going to sell. Okay, you say it was going to sell, and it began to sell, began to sell for a while. Then all of a sudden, there came this retracement, began to retrace. As soon as it begins to retrace, it begins to your margin. Your margin begins to drop from, let's say it was initially 700. It begins to drop to 500, to 400, begins to drop to 300, begins to drop to 200. The more it retraces, the more your margin level declines. And if your margin level gets to 100, your broker is going to stop you out of this trade. It's going to close off the trade for you because that's the limit it has taken. That's gotten to the limit. If you have 10 positions or 2 positions or 3 positions, it's going to close bulk of them and just leave one running, the one that can sustain the remaining margin. And so that's one key thing to take note. On no account should you trade to the point where your margin gets to zero. On no account. Sorry, gets to 100% on no account. All right, it gets to 100%. Try and close up the trades. Anything below 100%, you are entering the land of no return. So basically, uh that's how we draw daily support and resistance. Okay, it is from when I start teaching you my strategies or the strategy you're going to be using, you will discover that it is, like I said earlier, it is from those key levels that we begin trading from each day. We begin trading each day from those key levels. All right, so I'm going to drop the video here. I hope it's a little more clearer now. Have a wonderful time. I am your boy Imanika.